Good afternoon. This is Tom Alexander. It is Sunday, January 22nd. It is 12:08 p.m. Eastern Time in beautiful Charleston, South Carolina. And we're at a juncture where, quite frankly, I don't know what's going on. I really don't really have a clue about the next 5% move in the indices. And that's sort of the theme of this weekend's report. By the way, if you are finding me on YouTube, this is the video addendum to a written report that I send out free. If you're on my list, you get it free. If you're not on my list and you would like to receive the written report, please send me an email to tom@alexandertrading.com. I'll happily put you on the report. Also, if you find value in this, it is extremely helpful if you will like it and hit subscribe and make comments. All of these things go into the magical algorithm so that I'd like to really grow this channel, and that will be a huge help to me, and I'd very much appreciate it. You guys can help me out hugely in that regard. I will respond to all comments. I'm happy to answer questions. Okay, so let's dive into what we're dealing with as we move into the new week. On my screen, you see the four primary U.S. trading indices. The Russell chart is actually the futures continuation contract. I'm having trouble with my cash chart of the Russell, but for practical purposes, that's okay. It's the same thing, basically. And what I want you to see, there are a couple of things that you can notice by looking at the view of all four of these. And this is something that I think is critical that most traders seem to miss, that are obsessed with looking at oscillators, indicators, magic numbers, et cetera. The incredible information you can get just from being aware of the relative position of the indices to one another can give you incredible information about the market. And right now, it's a very, very mixed picture. It's very confusing, quite frankly. We are between critical levels. The downside, the most important downside level now will be last week's lows. The most important upside level will be last week's highs at the immediate level, especially in the Russell. I put this in the report. The Russell is the index I am watching most closely. It's the broadest based index. It showed relative strength down here at the lows. We had a sort of had a triple bottom down here. This was mid-July, then this was late September, and then we had a test in mid-October. While the other indices were making lower lows in this area, the Russell was holding up, and it's shown some relative strength. That's important to watch. It's now closed above its 200-day moving average. That moving average is right on last week's lows. There's nothing magic about a 200-day moving average except that everybody watches it. So because everybody watches it, it becomes important. Now you can look at the other. Now you can see that the upper level here is very important because it's basically been tested 1, 2, 3, 4, 5 times. So this level is really important. We came right up to it last Wednesday and reversed sharply, had no follow through. I'll talk about that in just a minute. But let's look at the other indices. The Dow. Now the Dow, off the lows last fall, showed the strongest price action, the strongest rally. Well, lately it's been a little bit weaker. Now it is holding this very important key reference area, and this area in the Dow is so important. This is the equivalent level of this retracement that the SPX, the NDX had, and the Russell had, this level in here. And you can see you sort of form this balance area at a much higher level in the retracement off the rally from the fall lows. So this level is important. Now you can also see we're a long way from the equivalent level in the Russell, the highs in this time frame. You're also comfortably below them in the SPX and certainly in the NDX. So you have all this disparate trade at the moment. It's very confusing. I'm confused. I don't know what where the next 5% move is. And maybe things will clear up. They do always clear up. That's the one of the neat things about trading your own money, managing your own money, and being an all-floor trader. You don't have to trade. You don't have to trade every day. You don't have to trade every week. So that's very, very, very powerful to not have to trade every day or every week, by the way. Now, okay, so what are we looking at? Let's take a look at the internals and see if they're telling us anything. All right, this is a standard chart that I keep. I have kept this information for most of my 38 years of trading. It's basically NYSE breadth. The red is a 10-day moving average of just NYSE advancing issues. Green is a 5-day moving average of NYSE advancing issues. And the blue is net breadth. And I plot the close every day. This is great contextual information. It cannot be rote traded. I've said this a million times, and I'll continue to say it a million times because traders all want red light, green light. This is not red light, green light. It's contextual. Now, I mentioned in last weekend's report, both the written report and the video report, that we were at an upper extreme, and I would be looking for, at a minimum, some two-sided trade, and we got two-sided trade in spades last Wednesday. Had a little bit of follow through on Thursday, and Thursday was an opportunity for this market to finally wash out to the downside. What do I mean by wash out to the downside? Well, to have a negative 2,000 closing breadth reading. We've had one since October 7th. So it's been 2 months and counting. We've had one right here, and that's the last one we've had. That is interesting. If we have the next negative 2,000 breadth reading, may be a signal of an important top in place. We will get a negative 2,000 breadth reading. It's just a matter of when. We're certainly on the clock. Now, it's also interesting that this 10-day moving average of NYSE advancing issues got so extreme here. This was the most extreme reading in a couple of years that I put in the report. This could mean we're in the early stages of a new bull market. I don't know. We're between levels from a week ago. We're between levels for the year. The picture is most definitively partly cloudy. Sometimes that's just the way it is. What we will have to see. Now I want to show you this. Well, while I'm on this page, let me finish up with VIX. Let's see. VIX is basically not telling us a thing at the moment, which is perfect because it's as confusing as everything else. There's no bell ringing information from VIX. Okay, let's go back and talk about shorter term breadth, the price breadth action. And this is something that you intraday traders, day traders should really learn and follow. It gives wonderful information. And again, it's not red light, green light, but it does alert you to the character of the market, the personality of the market. Bull trends have a certain personality, price breadth relationship. Bear trends have a certain price breadth personality. Right now, again, I'm not sure because, every time for weeks, for months, every time we reach this upper extreme in breadth intraday, it marked almost to the tick, at least a short-term top. And back over here, I said, and this is in one of the reports the past 2 or 3 weeks, you can go back and look at those. They're in the written report. You can click on previous reports and see what I said. I said, okay, if this is a real breakout, this was a breakout of that balance area, that multi-week balance area, I said, okay, it has to be different this time, meaning that you would have these divergences in breadth before we got any sort of meaningful decline. Well, we had a meaningful decline last week. And in that meaningful decline, We got something and we didn't get something. What we got was an intraday reading of negative 1400. Now, this is pressing the extreme of what you should see in a larger degree bull trend. What we haven't had yet, we haven't had this another breadth spike to the upside. And what is going to be interesting to see here is what we do early in the week, because frankly, breadth has to show more strength if this thing is going higher. Now, how much is it going to have left if we spike above this? That would be one hell of a move to get above this level, have a breadth spike, and then do the divergence thing into the next level. So the picture right now, again, is rather confusing to me. If on Monday we start trading deeply into Friday's range, it's a heads up. This was just some sort of one-day wonder that was algorithmically driven and wasn't real buying that has legs. And I really don't know. We're just going to have to wait and see what happens on Monday. In Globex in a few hours, and then on Monday's trade. But these upside levels that we established last week are important. The downside levels last week are important as well. You guys enjoy the rest of your weekend. I'll keep you updated. And again, if you found value, please like, subscribe, make comments, ask questions. I'll see you again soon.